everyone, don't forget to like, comment, share, and subscribe this channel. For today, I would like to differ about cryptocurrency. FTX US among 5 companies to receive chiefs and decided leaders from FDIC. The government agency had previously stated that deposits at non-bank entities, including crypto firms, are not covered by FDIC insurance. The Federal Deposit Insurance Corporation (FDIC) has issued cash and decides leaders to 5 companies for allegedly making false representation about deposit insurance related to cryptocurrencies. FDIC issued a Friday press release disclosing chiefs and decides leaders for cryptocurrency exchange FTX US and website Smart Assets, FDIC Crypto News, and Crypto Sage. In the leaders, which were issued on Thursday, the government agency alleged that these organizations misled the public about certain cryptocurrency-related products being insured by FDIC. These representations are false or misleading, the FDIC said in regard to certain crypto-related products being FDIC insured or that stocks held in brokerage accounts are FDIC insured. The regulator said these companies must take immediate corrective action to address these false or misleading statements on their websites and social media accounts. The FDIC has been vocal about the lack of insurance protection for non-bank entities, which includes crypto-focused firms. In July, the regulator issued a notice advising banks in the United States that they need to assess and manage risks when forming third-party relationships with crypto service providers. The FDIC reiterated that while deposits at insured banks were protected against default for up to $250,000, no such coverage exists for crypto firms. It has been alleged that the FDIC has taken an overly harsh approach to digital assets, going as far as discouraging banks from dealing with crypto service providers. As Cointelegraph reported, Pennsylvania Senator Pat Toomey, who also serves on the Senate Banking Committee, sent a letter to FDIC Director and Acting Chairman Martin Grunberg, informing him of allegations made by a whistleblower. In the letter, Toomey said he suspects that FDIC may be improperly taking actions to deter banks from doing business with lawful cryptocurrency-related companies. Tornado cash sanction will undermine the U.S. and strengthen crypto. Like any aging empire, America is reacting to its competition, but with Tornado Cash, its reaction is likely to backfire. The United States government's sanctioning of the open source code that makes up the Tornado Cash privacy protocol may be shocking, but it's not surprising. America has been tightening its grip over the global financial system for decades, ostensibly to cut down on bad behavior, but also to project power abroad. Economic sanctions, like the ones enforced by the aptly named Office of foreign assets control are a powerful weapon. The agency's website states that it enforces economic and trade sanctions based on US origin. Maybe that's all from me. Thank you for watching. Don't forget to like, comment, share, and subscribe this channel. Bye bye.